Welcome to the Trading Lounge and the day ahead report, and here we're looking at the S&P 500, and as you know the 1500 here is the old highs, so we can still expect more corrective patterns to occur here. There are a possible 2 or 3 wave counts for the S&P 500, and that would also reflect back into the Dow and the Russell and across many markets as such. So it's important to sort of focus on the S&P 500. It's a bit broader base than the Dow Jones as well, so the 500 companies. So there's a couple of counts here that I just want to sort of go over with you. We understood that approaching the 1500 here, a medium level, would cause swings in the market and corrective patterns, but corrections in Elliott terms are the sort of weakest link, and also too in when you're looking at the corrections, they're they're in wave 2 and also from wave 4 as well, and it's normally the wave 4 that has the more complicated corrections. That's because wave 3 here is normally, you know, the longest and the strongest, and wave 1s and 2s are quite sort of simple as part of the building process. So there's a lot of sort of emotion and energy that needs to unwind in a fourth wave. So that's where you tend to get triangles and double zigzags and so forth as well. So, you know, and there's different types of triangles as well. There's this particular one here. But the thing with triangles is that they are corrective patterns, and once they're completed, then they will continue to move on. And corrective patterns in triangles are normally 5 waves. So if we were looking at this as a triangle here, for instance, this would be an A wave, a B wave, a C wave, a D wave, and then we got to get an E wave in here because they're in 5 waves. So even we could expect this, if this was a triangle, then we'd still expect a wave E to come down through here as well before we've seen a push to the upside, because they are continuation patterns. If they've come from this direction and they're having a triangle, once they're completed, then they will continue on in that direction. So it is possible that this is a triangle here, and what that mean would be a new high through here, and then another corrective pattern down through here before we've seen a move to the upside. Now, this is one scenario here that we'd been tracking originally, where we had a wave 3 here, wave 4, 5 of 3 here. So we're actually going through an A and a B and a C wave here for a wave 4 here. So that's a real possibility as well. Once that's complete, we'll move to the upside. The move from the B to the C here will be in 5 smaller waves, a little bit sort of like that looking, I guess. So that's a real possibility here, and that's also fine for that to take out the high there as well. So a B wave can do that. A B wave would be in 3 waves to the upside. This move to the upside so far, it does look impulsive, but it can still be counted as a 3-wave structure so far, in terms of an A and a B, and then 1, 2, 3, 4, and 5 to here. So it's possible for that to roll over and complete that section there. The other one is that that this wave 4 here, this is just on the S&P 500 again, but on a 4-hour chart. Sorry about that. But in this case, we've got the wave 3 here, and we've got an A and a B and a C here for wave 4, and we've got 5 waves moving up here. So it'll take us about 15, 20 or 18 before that finds itself there. And then we would have a complicated wave 4 here in terms of an A and a B and C, and probably even more complicated, maybe simple, I'm not quite sure. But there's sort of like 3 counts really. In either case, they would all present further corrective swings, at least a minimum of 1, possibly 3, after a new high here has been created through here. So that's sort of what we've got to look forward to, but it's nothing new. And the other thing too is that you know, the larger the correction here, the safer the next trend, because the correction is actually the foundation where the next trend gets engineered from. If we were wrong here and this pushed straight up through here, then it would need to find support on 1530, which is the top of Group 1. I know that's a fair way away, but that's something that we would look to the upside. Also to the upside as well, if this moved up to the upside in 5 waves up through here, which is likely, then if it was going to continue further up here, we wouldn't miss it anyway, because if we had 5, if we've got, let's get this tool out here, if we've got our little 5 waves to the upside here, if that was going to be the case here, if that was something like that, which could be the top of the 3rd wave, but if we're wrong, it's going to keep on going up through there. Well, then what would happen is that we'll get a 3-wave counter trend there, and then we would start getting the next 5 waves up. So we wouldn't miss it anyway, because we would recognize the 3-wave correction here. We'd be working with a particular closest, largest number, and we'd catch it from that side there. So it's not like we're going to miss anything from the upside, but there is a strong bias with 3 options for further corrections across the 1500 here, and we've got to kind of keep that in mind too, because as I mentioned, you know, the 2007 highs, the all-time highs is basically where we are now. So it's only logical to see selling through here, and the driver for the upside there would be the US earnings, positive earnings comes out, which also brings us to our earnings as well. They've started to come out yesterday, so tomorrow, I don't think there's much on today actually, but tomorrow we've got the Telstra and News Corp and so forth. So best keep an eye on those markets there. Look, the Dow Jones is much the same as well. You know, it's at 14,000 here, so we knew that, and we still continue to expect more corrective patterns across here. That's why I felt that the S&P 500 has got a bit more sticking to do to the 1500 there, and that reflects back into the other markets as well. The FTSE at 6,300. The Australian market at 4,900 and above as well, but it's close to, it's quite close to 5,000 as well. So that needs to be taken into consideration as well. And when we're looking at BHP and Rio and so forth. So when we just have a quick look at BHP in Australia, at least anyway, is we know that the 38 was it's a minor trading level. It's a profit-taking number, and when we've been looking at this as a bit of a guide stick. We were looking at this being an ABC correction, so to speak, and that's still got time to play out here before we see any sort of further upside there. Even if I was wrong with this 3-wave swing here, and we started to move back up through here, then once again as well we would see that we would find support on 38, and we would be looking at it from that point. Now, we wouldn't chase the breakout through here, but the retest is more important than the breakout, so we'd be looking for support there as well. But that would we need to have a look at that on US BHP as well. We don't really follow the London one because it's not the last closing price, so to speak. But the same with the Dow Jones here, and this is the sort of count that we're looking at. We've got up for 1 and back for 2, and then we've got the 1, the 2, 5 waves here for the top of the 3rd. So still expecting the 4th here, which would sort of pull back to the 13.8 here, the 4th wave, 1 lesser degree, perhaps a bit higher. But once you understand the levels, there's still more work to be sort of done. Even if you're looking at this level here, for instance, it's come up and it's touched it, has its reaction, then it has the first little high above the level trying to find support up through here. It didn't find support on Group 1 here, so it's not going to go any further, and that's the second point that we would look, the same as we would look here at 14,300. The 14,400 here, the 144, that number's quite special in terms of geometry. It's also probably the only number that Gann and Elliott, well, not even Elliott really, but I guess in the wave, counting the waves themselves, but more so the Fibonacci sequence. That's probably where they all meet on this particular number here. So I'm sure there's going to be a lot more to be played out in this section up here to come. But just drilling into that a little bit further, we've got the same situation as we've got for the S&P 500 here. We've got a couple of options how this can play out. It can be a ascending triangle as such, but we still need it to play out here. But look, we're not going to miss anything because it's not going to go that far because it's at the 14,000 here. Okay, so it's not like we're going to miss anything as such, but we could be in for some more swings as well. But now that when that had reached there yesterday, to me that was a cause for selling, even though there was news coming out of Europe and the US, but there would have been some serious profit taking at that level there. But this strong bounce back just goes to confirm that we're in a bull market, but we're just in a correction. We need to work through that. But we need this market here. This market is currently resistance, isn't it? We need this on top over here as support. That's what we need for the next run up. But anyway, this is maturing a little bit and it's got more to come there as such. This has got a little bit more upside. If I just drill in that a little bit closer in there, we can see that just this little correction here is a nice little ABC here. So an A and a B and a C on the 5-minute chart here, and the 14,000. So we should be seeing more highs up here, but it should get trapped in the 10, the 20, and the 30 up here, subgroup 1 here. The Australian market, yesterday we were looking for or looking at or counting this move down through here, and I wasn't sure at that time if it was going to be in 5 waves or 3 waves down here. With this move up here, it does make it 3 waves, so we do have a small A, B and C here, but I also have to say too that this is not looking it's not like an impulse wave here. This is more of an impulse wave here, so we may, even though we've got an A and a B and a C here, it may just be the A wave, a B wave up to here in terms of an A and a B and a C up into here, and then a C wave in 5 waves down. So a larger ABC for this to occur. So there can be a 3-wave swing here, an A and a B and a C wave down to here before we get any further upside. Now, if that's not the case and we're just going to be pushing straight up from here, then, well, that needs to be taken into consideration as well. And the way that we treat that is that, yes, you can move in on top of support here at 49 and so forth. If you were here, you would have done it on group 2 at 72 here. But, if you get a retested support here, you can build a position here on 10, 20, and 30. Now, if 30 fails to become the support, then, you're not going to see any further upside. It's that simple. And failing support here, once the market moves up through here, it can come back down through here and come into 49.20 or 17 or whatever. But if it gets locked under the pivot here within this group 1 here and locks under that, then you need to pull those positions out. You need to unwind those positions because then we'll be expecting further downside through there. But it's okay for the market to move up here and spike down through 20, but it must regain support here and then move up here and find support, and then you can add once again through to here as well. So you don't have to miss the upside, but you just need to be cautious in how you position yourself for the upside, because it could just continue straight up. We could just go up through to here and then down through to here. So if we do get an A and a B, and a C wave does happen and you've got long positions in here, well, then you just have to simply unwind. But because we've got a 3-wave price action, then you just got to start again and work up. But at least you've got that 3 waves there. So that's the thing with corrections. They just can be expanding on themselves and just get larger. So that's possible. All right, let's have a look at the commodities. Okay, starting with copper, base metals. Look, we've got a positive wave structure. The current situation that's moving down through here, if it is a wave 4 here, then we can expect it to pull back 38.2%, or the wave 4 of 1 lesser degree. So between the 372 and 373 is a likely situation. However, if it comes down over the top of wave 1 here, then that's not such a good look. It's breaking one of the Elliott rules, with wave 4 moving into the price territory of wave 1 here, and that means that we would be looking at a corrective rally to the upside, and further weakness would probably be instilled into the market. But however, this move down here appears to be in 3 waves, a corrective pattern, so we should see further upside there. But generally speaking, this is it can come down further, and we're probably expecting it to come down further in a bit of a larger ABC here, and that would be it's still a positive market. So we could say that, look, while the market's above the 372, we could say base metals have got a positive edge to them, and we'll stay with that scenario, and that's what we sort of expected anyway. We expected profit taking at 80, at 380, and that's occurring now as such. So let's see that on a final level. If you're trading these markets here, the 37650 as support or resistance would create the bias for being long or short in this market here. The main support here would be 375 and also 37550, but the 7650 is the balance point within this little correction here. So while that is above the 50, then it's positive, and it can simply move up from there as well. The oil market, it's oil follows stock. Stock has moved up here much further up here, and oil hasn't. It's bounced off the 96 and found resistance at 97. We're looking at an ABC correction here. We know that we've got a little A and a B and a C here, but we're just calling it the A wave. So we're looking for a B wave here and a C wave to come down through here before we see any further upside, which would be sort of in line with the S&P 500 and so forth. So yeah, that's just sort of playing out there. You're in a correction. We don't normally trade wave 4s in terms of Elliott trading, but yeah. So anyway, that's where that is. No big deal. And the gold market is becoming more interesting because, as you know, with the Elliott count, and so we're looking at this being a possible down for wave 1 here, and an A and a B and a C here for wave 2 here. Okay, so normally I would short this, but I mean I wouldn't short it personally while I'm above the 1650 here. Look, if the 1672 became a really retested resistance there, and you could see that it was, you know, doomed at that stage there, and then the 65 became, then I'd start maybe looking at it getting a very, very small position from here, with the view of adding to the position under the 1650 here if that was the case. But normally I wouldn't short unless I was, you know, I had that as the retested resistance there, because simply being above the 1650 gives me a bias of a positive market that is supported. So I just think we just need to allow this to play out a little bit further, and it's the same for silver at 32 as well. So you'd want to have where's silver? You'd want to have 32 as your support here, and then you'd want to scale in through group 1, so the 10, the 20 and the 30, and if support is found on top of the 30, then you can go then you can really sort of move into it at that stage there. But finding support on top of a group 1 separates the thinking, the psychology from the closest largest number, and it's kind of free to go at that stage. But while it's in group 1, then you consider that the market is still working with the closest largest number, and 32 at that stage there. So if you're looking to short from here, well then of course you would be looking towards the 31.80, 72 here. So I would definitely be wanting the 72 here to become the retested resistance for any scaling in short position there, and you also want gold moving in your direction as well from that point there. Let's have a look at the FX there, because there seems to be a short position sort of setting up for the Australian dollar. Okay, starting with the US dollar here, we've had this this rally here in the US dollar. This is the 1 hour chart here, and it does appear to be impulsive, so that means that that A wave is probably finished there. We'll be looking at this B wave here, which normally pulls back 61.8% of this length here, but it's important more so just to track this. So we can look at it coming back to 79.30 as such here, some type of corrective pattern through here, and then wave C here. Now wave C might is a retest of 80, which may even go a little bit higher because of the length of wave A here, because wave A and wave C normally have some sort of equality or some sort of relationship based on Fibonacci, the 618 or so forth. So that's something to consider here. So while that's pushing up through here, it's obviously going to make the commodities a bit weaker, just by looking at commodity at gold and silver and base metals, as base metals and precious metals do have a certain type of relationship as such. So yeah, and the euro would be doing the sort of mirror opposite as from this here. So when we look at the euro in its corrective pattern, this is a 4-hour chart here. But we've got this sort of impulse wave down through here, which is in 5 waves. So because we've got 5 waves here, that means that after a correctional wave, here's wave B, then we'll see wave C here. So that will line up with the US dollar as well. So just sort of bear that in mind. So that move going back up through there, normally the A-B wave pulls back 61.8% of the A wave, which is just above the 136 there. So we've got that on a smaller chart here. Yep, I do. So this is a 3-minute chart here. So that's the A wave here. Okay, so from the A wave, so we just go back here a little bit. So that's the A wave coming down here. So this B wave here, a B wave is always in 3 waves. So that's a good thing to know. So an A and a B and a C. So the C wave is always in 5 waves, and there's always a relationship between the A wave and the C wave. The A wave normally drops a bit quicker, a bit sharper. C wave's on a bit more of an angle there. So if we were tracking the 3 waves up through here, then it would look like something like this. This is just like I mentioned, the 3-minute chart. So we'd be looking up for the A wave to here, and then there would be the B wave over to here, which would also be, B waves are always in 3 waves, so we would have an A, a B, and a C wave through here. That should be over to there actually. And then the C wave going up will be in 5 waves, so you can count the 5 waves there. So the 5 waves with the 1, the 2, the 3, the 4, and the 5th wave over here. So that will be the A, B, and C there for the B wave there. This is also around the 61.8 retracement level there. The wave 5 is normally, if there's an extension in wave 3 here, in this case there is, so the wave 5 will be about the same length as wave 1 here. So Group 1 should hold the price up in here, the 10, 20 and the 30, and if the S&P 500 is approaching its old high there again, then from yesterday's high, the day before rather, then that will be sold off naturally, as well as will the euro. There should be some relationship on the sort of intraday for the S&P and the euro, so it's all good. The Australian dollar, we're here. The pattern that we've been following since we got to the 104, we knew that there was going to be strong support here. We're seeing that strong support. It's kind of sinking sort of into it a little bit through here. So this is a wave 3 here, and this is how complicated wave 4s can get. This is a triangle, because it's came in this direction through here, and the triangle pattern is across here, then it will break to the downside. It won't go that far down, probably down to the 103 here would be the target. In terms of the 3rd wave here, would be looking at the A wave, the B wave, the C wave, the D wave, and then the E wave here. Now the E wave here, like the other waves here, will be in 3 waves. All of these are in 3 waves. They're just, as it's going through, a triangle diminishes into the 61.8 sequence, a bit like sound petering out, so it's like a bit of a sound wave, I guess. But so this move here, we should see an A wave to here, then a B wave retesting 104, and then a C wave to the upside. Now it can come up above the 104.30 here, in this area here. So basically an A and a B and a C wave, exactly like I just pointed out on the euro, for instance, a C wave like that. So we'll get 5 waves up for the A wave here, 3 for the B wave, and then 5 for the C wave here, and that should give us the top there. And then that would set up a short trade from there, so then we'll be looking for 5 waves to come down after that through here. It's not a really good idea to go shorting above a 10, like the closest largest number. It's all about getting an edge, and getting an edge is gathering all the possibilities and chuck them in the bucket so they're on your side, and having the 104 as a retested resistance. I mean, that broke through here, but when it came back up on the retest, it didn't fail, did it? It just goes straight through it. But this time over here, we think that it would fail, and that would be the short setup as such. Now that was a retest through there. That retest failed and dropped down lower, so that could have been a short position, under here, even though you would have got stopped out later. But you can see that it's failed, and it does take a bit of skill set to recognise what's failing and what's not. So reading the waves, reading the volume, reading the price, they're all sort of bottled up in there that you need to sort of get hold of. So this little section here, I don't know if I've got that there. Okay, so this is the low here coming off the 72 here. So we can see that that's the 3rd wave there, can't we? We can see that's the 4th wave, and that will be a little 5th wave up through here. There may be another little wave here, so that may just be the 1, 2, 3, 4, 5. Maybe there may be a little bit more into this one here. But basically we want to see the A wave finished, and then we want to see a 3-wave B wave, and then this pattern here, 5 waves up, we want to see that move up through, into this area through here, and then to see it fail through there. So basically, just the A, the B, and the C wave, and then we want to start seeing it. When we want to start seeing an impulse wave to the downside, that's 5 waves, then a 3-wave counter trend back there, and then starting down from that point. So if you get 5 waves here, that means you're going to get another 5 waves coming in through this direction here, and that's what you're looking for. So 5 down, 3 up. So this is actually a short trade setup through here. So you can use group 1 to position yourself. The 104.20 would be about right. Of course, you can get it higher up here if you want to nail the count, so to speak. Alrighty, well, that's it. So we're just still in swing and corrective modes. So trade less, use shorter time frames. Yep. Alrighty, that's it really. I can't really say much really, but even though we're up today, we can be down tomorrow again as well, because we're facing those old highs. So, alrighty, well, good morning and good luck.